Good morning, everybody. Welcome to our Thursday questions and answers session, where we get to spend some time with analysts who research the companies that we invest in. Apologies on the invite. I said that Pia would be with us today, but Pia has moved into a different role, and Marnus has taken over the banks from Pia. So Marnus is going to talk to us today about Capitec, one of the banks one of our favorite banks. It's definitely favored by our investors, and we're keen to hear what you've got to say. And then straight after that, Sean will do the technical bit, and then we'll throw the floor open for Q&A. You're welcome to type your questions in the chat as we move along. Otherwise, you can switch on your mic and your camera and ask a question outright when we open the floor. Thanks very much for attending. I'm handing straight over to Marnus. Thank you.
Thank you, Soro. Thank you, everyone. Welcome to today's call on Capitec. We will be having a bit of a look at Capitec's financial year results for 2025. During the year, Capitec, in the second half of the year, they eased their credit granting criteria with the election of the GNU, and that assisted with higher loan disbursements during the period. The baseline expectations or outlook for Capitec's management was for GDP growth to be below 1% for this year, so for the full 2025 year, with weaker exports, inflationary pressure, and a tighter monetary policy. So we'll see that the SARB will have an interest rate decision at the end of May. We will see if they decide to cut, with the Federal Reserve in the US not doing anything on the rates at the moment. For the full financial year, they had loan impairments despite loan growth. We'll see how that pans out in the future with the easing of credit granting criteria. You had net interest income growth, was mainly driven by interest on investments. You had an increase in transaction volumes. That comes with the increase in the client base. I will give more light on that later. And then the value-added services net income increased by about 56%. That's a point of attention for them, or a point of growth that they see the value-added services that they can add to their large client base. The valuation is currently at record highs. The recommendation is it remains a sell for now. I'll show you the valuation, and we can dive a bit deep into that. Now, what will change our mind? If there's a case for sustainable, continued high record levels of growth, or lower price. And we can have a look at the price, what it did in the April decline of the global markets. So for the full financial year, this is their results. The net interest income jumped close to 23% and reached the 20 billion mark. Net transaction and commission income, that jumped by 25% to 18.5 billion. And net insurance results, that increased by close to 19%. The credit impairments declined, as mentioned, and then operating expenses jumped by close to 3%. I'll dive a bit deeper into that to show where the increases came from. Headline earnings increased close to 30% to 13.7 billion. Your cost-to-income ratio increased to 41%. Credit loss ratio decreased to 8.1%. And then a return on equity of 29%, which is quite good. Deposits and wholesale funding, that jumped by close to 20 billion. It was split between your demand deposits, which increased by 11 billion, and then your fixed term deposits, which was close to around 9 billion rand. Net loans and advances, and that jumped by close to 9 billion. That's due to that credit granting criteria that was eased. Total dividends, that jumped 33% during the period. That's due to the strong results. And then capital adequacy ratio improved by 2%. If we have a look at profit before tax, net interest income was the biggest contributor to the jump. You can see there 3.7 billion rand. Your credit impairments went down, but that's a positive for your profit before tax, so that went up. Net transaction and commission income, that jumped over 2 billion rand. Your value-added services, as I mentioned, that's a quite big point for them, where they'd like to add services for their large client base that they can tap into. And then operating expansion dragged it down a little bit again by 4.1 billion. And then other income increased by 500 million rand to reach the 17.7 billion rand profit before tax. So non-interest revenue, your net loan fees, that increased slightly by 6%. The big jump here was the life insurance. So life insurance refers to funeral cover and so forth. They wrote 600,000, over 600,000 funeral policies during the period, and that their client numbers reached 3.2 million insurance policies in that segment of the business. So that's part of their focus point in tapping into their large client base. Credit life, that's up 1%. Total net transaction fee income, that's up 25%. That's due to higher client numbers, so they naturally would do more transactions. And then the other smaller two declines slightly, your net foreign currency income and other income. If you look at net income as a split, which includes the impairments, but as a split between your insurance, your business banking, your retail banking, it stayed the same from the financial year of 24. And you can see their retail banking still makes a very big portion of their business, while Capitec is trying to expand on the other two fronts. Insurance specifically can be tapped into their already retail client numbers, and then business banking as well, offering incentives to have a business bank account with them and your private bank account. This is a snippet directly from the company's financial statements. I just wanted to point out something here. It's quite interesting. If you look at the chart on the left, that's your transaction income per category. So branch, cash, and self-service transactions was the highest number. But if you look at the chart on the right, that actually transaction volumes by category is the lowest. That's just showing that there's obviously it needs to be charged a bit of a higher margin on those transactions, so a higher fee, because there's quite a bit of expenses that needs to be covered with branches and self-service cash availability points and so forth. Where if you look at monthly fees, debit orders, and other transactions, that number is quite high, and then that only contributed about in the second or third place as transaction income per category, and that's more of a kind of a recurring revenue point, because it's just easier for a debit order to go off than go to a branch and make a payment. If we look at the operating expenses, we can see here that salaries, which includes incentives, jumped quite a bit. Salaries increased because of the headcount that increased, not specifically because people earned higher salaries. Their salaries did increase close to inflationary, but also they had an 8% jump in the headcount. And then also incentives was quite higher than usual. That's due to the company's results that were outstanding, and also the share price that continued to increase. IT jumped a bit. The company continues to invest in their IT and expand to make sure that their operations remain smooth. And then depreciation and amortization was a small jump, but not significant. And then your other increased quite a bit. Not quite a bit, but it increased. There was your other is your marketing, subscriptions, professional fees, those type of other smaller numbers. If you look at the chart on the right, you can see that salaries, which includes incentives, but that makes up the biggest percentage of their operating expenses, which is at 53%, with IT at 14% and your other section at 25%. So if we look at the chart on the left, that's a pre-provision operating profit chart. It essentially shows the expectation of the 2026 financial year and what that growth or the increase could be, and what number it could reach. The dotted line is your rolling 5-year compound annual growth rates. That just smooths your blue line out to show the growth. And what that chart is doing with below assumptions and inputs is to show if you take an exit PE of 20 a cost of equity of 15, which it is more or less, and your current share price, I know it's trading above the 3,500 Rand per share mark today, but when we did the slide, it was trading at 3,404. If you take all those components, what's the required 5-year annual growth rate number and what that needs to look like to justify the share price? And that's at 24. If you look at that dotted line in the chart, you would see that's closer to 20% at the moment. So currently, that's one of the reasons we believe that Capitec is a bit overvalued at the moment. On the active client basis, the chart on the right, it grew again by 9% as the previous period, and they've reached 24.1 million active clients for 2025. If you look at the valuation at the moment, you have your top line, your middle line, your bottom line. Your top line is a standard deviation up of the average of the PE, and your lowest standard deviation line is the bottom one. So it's trading close to the upper level where it traded last year, which means in that sense, it's looking like it's overvalued. Also, that dip where it went back to that low standard deviation line was in April after the Trump administration announced on Liberation Day a bunch of tariffs. And it looks like that was more or less the buying opportunity at that point. But currently, if we look at the PE basis and where it usually hits resistance or where it hits an overvalued point, it is currently trading more or less there. And for that reason, we believe it's a sell. On another valuation point, if you look at Capitec compared to its peers, so Absa, FirstRand, Nedbank, and Standard Bank, they are all trading at a PE of around between 6 and 10, with FirstRand being the one trading at 10. Capitec is basically trading 3 times plus all of them, which is one of the other reasons we believe it is overvalued at the moment. You can also see there the dotted lines where it's one standard deviation up or one standard deviation down from the average. And you can see there it's kind of jumped completely through it at the moment, where previously it found quite a bit of resistance there. So relative to its peers, Capitec is also currently trading overvalued. If we look at the share price performance, this is a three-year chart. It kind of moved a bit down from May 2022 to close to July 2023, before completely taking off and outperforming from that point on. It did pretty well. That right-hand side blip you see there down before reaching new all-time highs recently was that April Liberation Day tariff announcement and the dip. So you basically could have bought it below that 2,800 Rand mark at that point. That brings me to the end of my presentation. I will now hand over to Sean to take you through technicals.
Yeah, good morning, everybody. Yeah, you can see the chart there again of Capitec at yesterday's close. And for a change, the technicals agree with the fundamentals. So the chart there shows that the share price has been testing a resistance around about the 3.5 level, but it has failed to close above it. I see today we pulled back slightly today. Saying that, it's also creating what you can call a multiple top reversal chart pattern. But also it's trading at, as Maureen says, at all-time highs. I see today it reached 3,573 Rand. So yeah, but also you can see on the chart there, yesterday the share price tested that short-term support trend line, but also failed to close below that. So we are at a turning point at this level. So it is still trading above all its moving averages. It's 20-day, it's 50-day, and it's 200-day moving averages. So both the medium-term and the long-term trends remain bullish. You can see also right at the bottom there, the bit of the volume chart histogram, you can call it that. It still shows you some strong volume accumulation, hence why prices are staying where they are now. But in the short term, I would expect a breakout and close below that support trend line very soon to, so we just move this out the way here, to trigger a change in trend on some profit taking. There has to be some profit taking soon. And you can also see there with the MACD indicator, that oscillator there, although it's trading in overbought territory, it's still just above its trigger line with no clear bearish signals yet. It doesn't show in this chart, but other technical the oscillators like the RSI and stochastic are very overbought and obviously giving sell signals now. So the share price, as Mona said, is trading far above its intrinsic value of 310. You can see there on the screen, which is very close to that 200-day moving average. That's that yellow line. And as I said, the fundamentals and technicals agree, and hence our sell recommendation. So yeah, it's one of those stocks, as Mona said just now, with that Liberation Day, that dip. Capitec is one of those stocks where you have to buy them in the dips. So expect to pull back to the 200-day or that intrinsic value to give you a better buying opportunity. And that's how I see it.
Yeah, I think the Oaks with buy and hold strategies, it's almost like Naspers. You know, I sold some Capitecs at 33 Rand years ago, and I thought it was a hero. Now it's 3,300 Rand. So, yeah, never a perfect time, and we know it's hard to time the market, but it certainly looks a bit expensive. And then on the chart, Sean, I mean, we haven't seen a proper volume blow off. It's just made new highs. We know that S&P released expectations yesterday to say that the South African GDP growth is now being increased to about 1.6% for the next couple of years, and the bond spreads have tightened in the US, so there's no recession or default really expected there. So I don't expect the market to come off a lot, but looking at your chart there, if that double top pattern of theirs plays out, then Capitec can at least come back to 3,000 bucks. So agree with Marnus's sell recommendation there. Let's see. Marnus, the other question that I had before, let's see if I've got anything in the chat yet. Okay, we've got a question there, but I just wanted to quickly ask. This company is very much technology reliant, and they've got some good technology. We know they've got a good app, and they've been working mostly as an online business apart from the branches and that. Why would they increase headcount that much? Did they say something in the results?
They took out an Avafin, so they had to increase that, and also they had a few branches increase, but it wasn't significant. I think it was about 20 or 15 or something, so that also contributed.
Okay, all right, perfect. Yeah, I was just wondering, you know, in a technology changing world where AI is expected to result in job losses and that, it's funny to see a company who's so techy to increase headcount. Okay. Let's go to Andre's question here. Andre says, what is your view on the potential growth in their business banking, Avafin Venture and other alternative income streams, e.g. MVNO, seems better positioned than other banks to exploit these opportunities? Have you got any view on that, Marnus?
I do agree with that. The big thing let me start with Avafin, is that, you know, what we've seen with these a lot of SA companies is they're going to different countries, they venture in, and a lot of the time they try to kind of use the same approach that they use in SA, which can't. SA is very unique, and then it doesn't work. So hopefully this works. It is a banking, it's financial, so I believe it will work. They've got good management, and we'll see what that growth looks like. It might take a bit of time to specific to Avafin to get to the growth levels they want. That's the risk there. Good opportunity. Let's see how they use it. Business banking, I believe, where it comes in for them is their value-added services. So incentives of, you know, have your business account with us. You already have your personal account with us, and we will give you a discount, or we will give you another service, and so forth. So business banking is a big opportunity for them, and that's fairly still new in their business, in Capitec specifically. So that's definitely a big opportunity for them to exploit. And then they've got a lot of other opportunities. They've got a large client base, so they are trying to focus on that client base with insurance, writing policies, also life insurance, and also they've got their Capitec Connect, so their phones and data purchases and so forth. So there's definitely opportunity for growth. The risk of Capitec is also just that, you know, you've got a limited amount of numbers people in SA. You will never have 100% of the market. So that number, we'll see if it starts to diminish as it goes along. But they're definitely positioned right to exploit a lot of the opportunities that they are creating for themselves.
Yeah, they do have a lot of opportunities. It's a well-managed company. When is Gerry leaving? In June, I see.
Yeah.
But I mean, the market hasn't even flinched. So I think they're in a good space. It's simply a question of the way that Marnus and them evaluate the thing, that they think it's slightly expensive. It's definitely not a price at which we would buy. And we are looking to offload some in the portfolios, and that's the reason why Marnus and them are saying the stock's slightly overvalued. It's definitely not a negative statement that they're making. They're not saying that this thing's now going to stop growing and that. We all know that there's lots of opportunities abound for the stock. Let's see if there's another question here. Not specific to Capitec. Do you publish these discussions on the YouTube channel? Yes, we do. Vessel, I think it's, if you type in and search PSG Consult YouTube on YouTube, it's on that Consult YouTube channel. We post these discussions. We post them sort of a couple of days later. It goes to the marketing team and they then upload it for us. So it's typically about by the next Wednesday, more or less, except now with all these public holidays, I'm a little bit behind in sending these recordings off to the marketing team. So yeah, but we typically publish them there, and you can go listen to all of the previous ones there that we've had. Vessel says thumbs up. Andre says thumbs up on his question regarding Overfin. I don't see any further questions. There's nothing coming in. Anybody want to ask a question outright? Switch on your mic. Nothing. Right. Sean, what's up next week, bud?
Harmony.
Sorry?
Is it Harmony?
Yeah, with Marnus again.
Oh, with Marnus. Lekker. Yeah?
Sorry, it's Gert here.
Yes, Gert, go for
I've
it.
sent you an email
Gert,
for that.
you wanted me to discuss the corporate actions.
Yes, the,
Yes.
what you call it?
Yeah, let me talk to that quickly. I just want to call up your mail on my second screen here. I promised. Okay, cool. So this is slightly off the normal stuff that we discuss on this chat, but I think most of you guys will find interest in it. And Gert had a couple of questions about a specific corporate action that's taking place at African Rainbow Capital Investments, right? Now, we're not going to discuss the merits of that particular corporate action. I would rather discuss because we also don't include that in our portfolios, and we can't then, give an opinion about it, but I want to talk about the mechanism quickly. So what's happening in that case is the company's gone through a process where it's been approved. They're going to become an unlisted company, and they've made an offer to shareholders to take cash or remain shareholders in the unlisted company. So Gert had a couple of questions. He said, which broker will keep the shares, right? If they go unlisted, and nobody will. The company will administer the shareholding themselves, so it'll be done through the company secretary, which poses a couple of issues, because the next question was how to value those, and I said, well, it'll be valued on the results of the company in the same way as what it pretty much is now, except there won't be a free market where there's willing buyer, willing seller. So it'll be difficult to value the shares. To offload your shares was a different question that he had. If he wanted to sell it, he would probably have to give instruction in writing to the company secretary to indicate that he wanted to sell those shares. And then they would have to find a buyer for the shares. If there was a big block of shares and they could offload it to some institution who wanted to take an interest in the company, then it would be easy. But I think if it's a small amount of shares, you may find it difficult to offload, unless, of course, the company has got a buyback initiative that is going. The price that it will be sold at, is not nearly as transparent as the stuff that trades on the JSE. So obviously those questions arise as well. Will I get a fair price for the thing? And from my experience, as I've told Gert, I said, typically when things result in a buyout or a cash offer to minorities and that, and you end up with a share that's not listed anymore, it results in a lot of admin and a lot of pain. Even though the company is nothing wrong with the company, it becomes an administrative nightmare. And the price discovery obviously isn't as transparent as it is, and it's not easy to offload. Like I say, I prefer not to have unlisteds. But that's just a personal preference. And I see Sean nodding his head there. So he's obviously learned that lesson too. And I'm sure some of the people on the call also have. So Gert, to summarize quickly, when an offer like this comes around, sometimes the shareholders hang around hoping for a higher offer, and then they reject it. But in this case, it's been unconditional. So they're not going to raise their offer. If there are rejections, they're simply going to delist, and the guys are going to sit with unlisted stocks, which if you only have a few of them and you don't have a big block, then I would recommend no. Yeah. Personally, I wouldn't sit with it.
Accept it.
Surely?
Yeah, no, I say accept it, and also there's no brokerage costs.
Correct, yes. All right, so that then just something on corporate actions to help you guys understand the workings of the corporate actions a little bit. And if there's similar questions, guys, drop us a mail and we can deal with it in one of these calls. Manas, as far as Capitec's concerned, I don't see any further questions. Thank you very much. To summarize, we think it's overpriced at the moment. We don't anticipate any negative news, negative movement around the company, but certainly can pull back to a slightly cheaper valuation. Sean's technicals indicating that a double top is forming. If the volume increases a little bit, I would take cognizance of it and then keep a closer eye to it, because it can go back to about the 3,000 level, maybe down to 2,800, and then, yeah, still nothing wrong with the company. I hope you guys have a great Thursday. It's almost 12 o'clock. Manus, thanks for your insight, mate. Thank you, Sean, for the technical bit. And we'll see you guys next week when we talk Impala with Manus. Thanks. Cheers.